Okay. So let's begin. Let's begin the next chapter in our syllabus, chapter number 10. So this chapter again is equally important, has a weightage of 14 marks in the exam. And if you ask me, like we had couple of adjustments which are tricky in amalgamation, the same thing happens here. There are two, three adjustments if you can crack properly. This chapter is cakewalk. Just like amalgamation, this chapter is also lengthy. The problems are going to be a little lengthy, but yes, at this same chapter again will be cut copy paste at final level. So whatever you are learning now will be read at the final level also. So I am starting both the standard and the chapter together in your syllabus. Second module, last chapter, chapter number 10, accounting standard for consolidated financial statements. And there I am starting AS 21. So there are three AS 21, AS 23, AS 27. All these three are relating to the same topic, consolidation. So AS 21 talks about consolidation with subsidiary. AS 23 talks about consolidation with associate. And AS 27 talks about consolidation with joint venture. So this three, out of these three, AS 21 is the most important. There have been three attempts till now. All the three attempts they have tested only on AS 21. That means still AS 23 and 27 is not tested. So all the three becomes important. Now the first point, what is consolidated financial statement? We all know financial statement. Basically, five things. Five things are included in financial statement. What are those? So whenever we talk about financial statements, balance sheet, P&L, cash flow statement, notes to accounts, statement of changes in equity. Financial statement. Whenever we talk about financial statement, all these five are included. Balance sheet, P&L, cash flow statement, notes to account, and statement of changes in equity. These five are included. Now here you need to understand there are two sets of financial statement. One is standalone financial statement. One is consolidated financial statement. Let's understand with your example. Now I ask marks of Krish. I ask marks of Tosif. I ask marks of Vashita. That is standalone. I'm asking for individual students. But I should also know the marks of the total class. Yes or no? Yes. So when I ask individual students their marks, it is called standalone marks. It is marks for that particular student. And when I ask the marks for the entire class, it is called consolidated marks. Consolidated marks, everyone. So now, Bhaiya, when this standard is applicable, how it happened, what is done, all this you will understand. But consolidation financial statement nowhere impacts your standalone financial statements. I repeat again, consolidated financial statements nowhere impacts your standalone financial statement. It is very simple, guys. Now let's say, for example, I give three balance sheets. I give Harsh three balance sheets, A, X, Y, and Z, and I'm telling add all the three. What Harsh will do, all the balance sheet has the same format. Equity and liability, shareholders fund, reserves and surplus, same format. What will Harsh do? Add all the three numbers and write down the balance sheet, everyone. That is consolidated balance sheet. That is consolidated financial statement. But if it was that easy, it would have not been there in our syllabus. There are certain adjustments. There are certain adjustments which we have to make. Now, concept of group, holding, and subsidiary. We all know these concepts. We have learnt in CA Foundation Law and CA Inter Law. So when we talk about a group, now let's say, for example, I am a shareholder of Reliance. By example, I am a shareholder of Reliance. I'm a shareholder of Reliance. Now, as a shareholder, as an investor, I have very few, only 5 shares. But as a shareholder of Reliance, will I be interested only in Reliance or the entire group of Reliance? Entire group of Reliance. Why, Bhaiya, you are worried when you are the shareholder of Reliance? Why you are worried about the other companies? Because Reliance has invested in those companies. Now, let's say, for example, tell me a subsidiary of Reliance. Geo. So, Geo Financial Services, that is a subsidiary of Reliance. If Geo performs well, the Reliance balance sheet will get boosted. Everyone. So, as sometimes I don't want to know company as a individual, as a standalone. I want to know as a group. As a group, how well that company is doing. Now, holding company. If there is subsidiary, there is holding. As per Companies Act, they have given detailed definition for accounts not required. If you have a subsidiary, then the person who is the person who is holding the shares in the other company is called holding company. Subsidiary company, they have given 2 points. More than one half of total voting power. If one company has more than one half of total voting power, this company is called holding, the other company is called subsidiary. And second, controls the composition of board of directors. Now we will understand, we will get into one more level. That's a holding company which has a subsidiary S1. And this subsidiary, this becomes very boring. Let me put some random names. There's a company called Ronak. Ronak is holding 80% share in Naman Limited. So Ronak is holding 80% share in Naman. And Naman is holding 90% share in Krish. Everyone. Now tell me between Ronak and Naman. Ronak is holding Naman subsidiary. Between Naman and Krish, Naman is holding Krish is subsidiary. And between Ronak and Krish, Ronak is ultimate holding. So holding company is ultimate holding. Holding company will be your ultimate holding. So Ronak, between Ronak and Krish, Ronak will be ultimate holding and Krish. There's no ultimate subsidiary. It is subsidiary. So between Ronak and Naman, Naman is subsidiary. Between Naman and Krish, Krish is subsidiary. Between Ronak and Krish, again Krish is subsidiary. Everyone, you can remember this like 3 generations. You, your father, and your grandfather. So for your grandfather, you are though grandson, but you are no less than a son. So that's a simple logic. Now the point is, bhaiya, why should we have subsidiaries? Why should we have subsidiaries? If you are doing business, do on your own. Reliance, they can do this business also. Jio, Reliance, they can do other businesses also. Why, bhaiya, why is there a need of having subsidiaries? 2-3 scenarios, nothing to do with this chapter, but you must know when you are doing consolidated financial statement, you must know. And remind me, today I'll show you a video on consolidation. A very good video available on Reliance. Reliance, when they acquired Big Bazaar. You know, Big Bazaar is acquired by Reliance. When they acquired, how did that acquisition take place? You will see a detailed video, YouTube video there. But now, pay attention. Why should you have subsidiary? Now, at present, there are rules in insurance company stating one company can be agent of one insurance company only. Now tell me any 3 insurance companies in India. LIC, United, Star Health, ICICI, let it be. Multiple companies are there. Now, if I incorporate a company X Limited, that X Limited can be an insurance agent only of one company. Now, bhaiya, if I want for other companies, what will I do? I will incorporate different legal entities and make them the brokers. Everyone. That is first reason. Second, ease of doing business. Now, I take CA and I take CWA. Is this two connected? Yes or no? CWA, CMA. Is this two similar, or can I say same industry? Yeah. Both are in education. I take classes for them. But just imagine, I take CA classes and I get into a business of sugarcane juice. Don't imagine me crushing the sugarcane. Just I get into sugarcane. Now, these two, are they connected? No. Now, how do I manage these two companies' expenses? How do I manage revenue of these two companies? How do I know whether which business is giving me more profit? So for those purpose, we incorporate a different entity so that specific control can be given, can be made there. Now we all know when we talk about conglomerates in India, we all know Adani, Ambani, then ITC, Tata. These are all conglomerates because these guys are there in multiple businesses. Aditya Birla. So these guys is that they are there into multiple businesses. Now, how do they run this multiple businesses smoothly? So they what they do for different and they do business in large scale. Any of them you can name ki हाँ चलो भैया ये this five they are doing small businesses. Their balance sheet the numbers will be in crores and below that figures will be in crores. So that is the size of business, that is the volume of business they are doing. So when you want to exercise a specific control, it is better to incorporate different subsidiaries. And now as you want to do into more, you want to get into different businesses in the name of diversification. You have heard this word diversification. What is diversification? Expanding your business, but not in similar lines. Now, me getting into sugarcane juice business. Yes, everyone. Yes. So that will be diversification. When you want to diversify, it is better to incorporate a separate legal entity. Then holding company, subsidiary company, we already know. I'm not stressing too much now. Now, few of you would have learnt in law. Those who have not learnt in law, I will explain you now. There is one section called as section 19. Those who have learnt law, I will tell only section numbers. Section 19. Hint second chapter. 20 cap. Okay, 19. So section 19 of Companies Act 2013 says subsidiary cannot hold shares in holding. Subsidiary cannot hold shares in holding. Why? Because holding company, now holding company, will you give instruction to your dad or your dad will give instruction to you? A few people are smiling. We give instruction to our dad. So generally the instruction will flow from your dad to you. So always holding company will have shares of subsidiary. Section 19 says subsidiary cannot hold shares in holding. Everyone. But there are three exceptions. In these three scenarios, subsidiary can hold. In these three scenarios, subsidiary can hold. And you guys will tell me all those three. Very good. Trustee. Legal representative. Before subsidiary. Very good. Very good. Very good. So all these three examples, I'll give one by one. First, legal representative. Legal representative. Let's say for example, there is a company Anand Limited. There's company Anand Limited and Anand Limited has a subsidiary, Harsh Limited. Now, in the company Anand Limited, there was a shareholder Moksha. So Moksha had 5% shares. Moksha had 5% shares in Anand Limited. Everyone, please try to focus on the example rather on the names. So Moksha had 5% shares in Anand. Moksha made a deed. After I die, my share should go to Harsh Limited. After I die, my share should go to Harsh Limited. Now, will Moksha live forever? No. We pray she lives for 100 more years. After 100 more years, when she died, what will happen to her shares? Transfer to Harsh Limited. Now, Harsh Limited, being a subsidiary, is holding shares of holding company. Allowed by law. Allowed by law. Everyone. Everyone. Yes. So this was an example for legal representative. Legal representative. So what happened? legal representative, you are not, subsidiary is not the shareholder. Subsidiary is not the shareholder, but by way of some legal provision, by some deed, by some gift, they got the shares from someone. They got the shares from someone. Now, bhaiya, can Hirsch Limited reject? The answer is no. Hirsch Limited cannot reject, because what is written in the deed will happen. What is written in the will is supposed to, is deemed to happen. So cannot reject. But Hirsch Limited, bhaiya, can he sell the shares? Yes. Provided that clause is not there in the agreement. Moksha wrote a clause, Hirsch Limited cannot transfer the shares. Then Hirsch cannot. Otherwise, Hirsch can transfer the shares. First example, everyone, is this clear? So, subsidiary cannot hold shares in holding. First exception, legal representative, everyone. Now, second example. Now, Anand and Hirsch. Hirsch had 5% shares of Anand Limited. Hirsch had 5% shares of Anand Limited. Now, Anand ego got hurt. Well, how come you are having 5% shares of my company? I will purchase 60% shares of your company. I will purchase 60%. Now, the day he purchased 60% share, did Hirsch become subsidiary? Yes. Everyone? Yes. But he was already having the shares. Is it allowed by law? Yes. That is our third point. So, before it becomes subsidiary, it had shares allowed by law. Before it became subsidiary, it had shares. It is allowed by law. First one, trustee. Now, who are trustees? Caretakers. In temple, you have trustees. In association, you have trustees. Those trustees are nothing but the caretakers. So now, let's say, for example, we'll continue the same example. Anand Limited, that's a subsidiary, Hirsch Limited. Moksha is having 5% share. Now, Moksha did not die. Moksha is giving that 5% share to Hirsch Limited and telling you, please take care of my shares. Whatever is the return you collect properly, all the voting thing you do properly, whatever are the rights of shareholder, you please utilize it properly. Now, Hirsch Limited, they are the trustees. They are the trustees. They take care of the shares which are held by Moksha. In that case, it is allowed by law. In that case, it is allowed by law. So, three exceptions where subsidiary can have shares of holding. First, legal representative. Second, before it become a subsidiary. And third, trustees. Everyone, is it clear? So, Section 19 prohibits a subsidiary company from holding shares in holding company. Then, however, a subsidiary may continue when holds at legal representative, trustees, and shareholder even before it becomes a subsidiary. Now, again, this see this next point, Unnati will explain in detail in law. This is not required here. Now, AS 21. So, AS 21, what and all is covered? Consolidated balance sheet, consolidated P&L, consolidated notes, consolidated cash flow statement. So, bhaiya, whatever was there in the definition of financial statement, everything is covered here. Everyone.
Yes, sir.
No. Parent company. Holding company, pet name is parent company. Everyone. So, holding company and parent company are same. Holding company and parent company are same. So, a parent company is an enterprise that has one or more subsidiary. And subsidiary, we have already read the definition above. Control. Now, this word control, I did not say you. Now, in the class at this moment, can I say I am controlling you guys? No. Uh, do you think at any point I can control? This is ये record हो रहा है, थोड़ा तो शर्म करो. So it is when we say control, see, control might happen by multiple ways. Sometimes your dad will talk with you directly and he will make the things done. Sometimes it will come through your mom. Yes or no? So control might be there either directly or indirectly. So control means the ownership directly or indirectly through subsidiaries. So now let's say, for example, X Limited, they are having 70% share in Y, and in Z, Y is having 40 and X is having 30. Now between X and Z, is Z Limited subsidiary? Yes, because directly they are holding 30, indirectly they are holding 40, everyone. Yes. So total it is 70%. Then X Limited is controlling Y Limited. X Limited is controlling Y Limited. And second, control the composition of board of directors. Same 2 points what we had for subsidiary. So if you are a subsidiary, you are being controlled. If you are holding, you are controlling, everyone. So holding company, see how many different names it got. Holding company, parent company, controlling company, subsidiary company, child. It is being controlled. It is being controlled. Now, group. A group is parent and it's all its subsidiary. In our example, family. Our family is a group. So same way here, parent and all the subsidiary put together is group. But yeah, associate joint venture, that we learn in different standards. Next, minority interest. Minority interest. Very, very simple. Now, let's say, for example, in this class, we have 30 boys, example, 10 girls. Who are in minority? Girls. Now, who can dominate others? Ah. So, boys are 13 numbers, girls are 10. Who can dominate? Obviously, the boys can dominate over girls. Real life never happens. One is enough. Experience. So numbers doesn't matter. Okay, but jokes apart, jokes apart. Now let's say, for example, I am having 80% share in Reliance. Example. Reliance market capitalization is 2 lakh crore plus, and 80% means 1,60,000 crore plus. हाँ, ठीक है, we'll discuss after the class. So now, if I am holding 80% share in Reliance, someone else is holding 20%, they are minority. They are minority. So other than holding whatever share is there in subsidiary, it is minority. Minority, everyone, minority interest. So a lot of times, this guys, the holding company dominates the subsidiary. Whatever they want, they can do, because more than one of they are having. Then equity, not required. This also not required. Yes. Consolidated financial statements will be prepared by parent company. Consolidated financial statement will be prepared by parent company. Holding company will prepare the consolidated financial statements. Now, wholly owned subsidiary, partly owned subsidiary. What is the difference? Bhaiya, in subsidiary, 100% shares I am having. Everyone, 100% shares I am having. Then it is wholly owned subsidiary. But I am having less than 100%, then partly owned subsidiary. Bhaiya, 99? Partly owned. 99.5? Less than 100 is partly owned. But that's a challenge. There is a challenge. Companies Act is the challenge. Companies Act says public company minimum 7 members. Everyone, minimum 7 members. So, bhaiya, how can there be 100% holding? Makes sense. Everyone. So, in such scenarios, law says, see, public company 7 members, 6 members are very small shareholders. They are having 1 share, 2 share, 5 share, 10 share, that's all. And remaining 1% is having the remaining stake. Then also it will be called wholly owned subsidiary. Then also it will be called wholly owned subsidiary. Everyone. Everyone. So, bhaiya, then it will be less than 100, yes, but the proportion will be very, 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 very small. So, this extra members, why you have to comply with law, to comply with law. Now we will see the difference between wholly owned and partly owned. Wholly owned subsidiary in which in is one in which all the shares are owned by holding company. And here all the shares all the shares are not acquired by holding company. Everyone, they are more than 50, but less than 100, less than 100. 100% voting rights. More than 50%, but less than 100%. No minority interest. Those guys have made that, members just to comply with the law. But here we will have minority interest held by outsiders. Minority interest which is held by outsiders. Everyone. Then the purpose of preparing, I already said, as a shareholder, as an investor, as a fund provider, Darshan, I am not only supposed to know about the performance of a company, but I should know performance of the entire group. Now, relevant provisions of Companies Act. This also you will learn in law. Where a company has one or more subsidiary or associate, it shall, in addition to standalone financial statement. What is standalone financial statement? Individually for that company, prepare consolidated financial statement. Now, law is very clear. If you have a subsidiary, you have to prepare consolidated financial statement. If you have subsidiary, then all this is not required. Exemptions from preparing CFS. Exemptions from preparing for CFS. Now, CFS stands for Consolidated Financial Statement. We get confused with this word a lot of time. Kush, cash flow statement is also CFS. Consolidated Financial Statement is also CFS. Both are CFS. Now, there are three scenarios. There are three scenarios when you need not prepare CFS. Everyone, can we begin? First point, it is a wholly owned subsidiary. What is wholly owned subsidiary? 100% voting power. 100% voting power in the subsidiary is with one company. Or it's a partly owned subsidiary. So they are telling whatever subsidiary it is, whatever subsidiary, and all its members, including those not otherwise entitled to vote, have been intimated in writing and for which the proof of delivery is available, do not object to the company not preparing the consolidated financial statement. Very simple. Your holding company shareholders are okay, don't prepare. Finished. Everyone. Everyone. Who will prepare consolidated financial statement? If holding company shareholders, you have informed them. You have proof that we have informed them and there is no objection, then don't prepare. Why you are preparing mainly for them and they don't want, why do you have to prepare? So, uh, and members have been intimated in writing and proof of delivery is available and they do not object. Everyone. So if holding company members, they are telling it's okay if you don't prepare. We don't want, we trust you. Then you need not, you need not. Second, it is a company whose securities are not listed or not in the process of listing on any stock exchange, whether in or outside India. Not listed or not in the process of listing. We have read this in CA Foundation Companies Act. Listed company are those companies which are listed in recognized stock exchange. Hmm. 603 BN01 BN6603 TM04 BB9499 DO TN04 BC 0837 DO
TN05 BS6901 active arms. Wrong number. TN04 AU73 0. इसी के लिए
Okay. So we have seen listed company is that company which is listed in recognized stock exchange. Now, if you huh, does. So it is not listed and neither it is in the process of listing. Simple logic, public is not involved at large. Then why do you have to give so much of information? And its ultimate or intermediate holding company files consolidated financial statement with registrar. Very simple example, guys. Very, very simple example. Now, everyone, please try to understand this example. Uh, Ronak is having 80% share in Naman and Naman is having 90% shares in Krish. Now, tell me, Naman has to prepare consolidated financial statement or Ronak? Naman or Ronak? Very good, both. So first what will happen? Krish balance sheet will be added to Naman and Naman balance sheet will be added to Ronak, everyone. Yes. So here they are telling very, very simple, very, very simple. If Krish balance sheet you are adding directly to Ronak and Naman balance sheet is also added directly to Ronak, then Naman need not prepare consolidated financial statement. Everyone. Because anyways, Krish balances will be transferred to Naman. Everyone. And Naman to Ronak. So instead, via, you can transfer directly. So in this case, Naman is not required to prepare consolidated financial statements. Scope, not so important. And here you see standards AS14. What is AS14? Amalgamation. AS13. Now control. The same point are being repeated again and again. Hmm. Exclusion. Yeah. Now exclusion from preparing consolidated financial statements. Now, what happened? Let's say, for example, there is a company Navya Limited. They have done fraud. Scam 2024. They have done a scam. Now, law is telling the companies. Listen, क्या कर रहे हो आप? So law is telling Darshan Limited, you hold the share of this company temporarily. Everyone. So law is telling Darshan Limited, you hold the shares of Navya Limited till the case is sorted. So now Darshan Limited is holding the shares of Navya. Now he became holding company. He is controlling everyone. With the last 31 minutes, ऐसे ही बैठे थे. ये नव्या आती फुल 32 टी दिख रहे हैं. तो हाँ दिख रहा है इधर से. हाँ very good. So now Darshan is holding 80% shares in Navya. So now is Darshan required to prepare consolidation? The answer is no, because he is holding the shares temporarily. So where the control is intended to be temporary, consolidation is not required. And next, it operates under long-term severe restriction, which significantly impairs its ability to transfer the funds to parent. Now, ये इतना डिटेल में नहीं चाहिए. First point, it's enough. All this not required. This we have already seen. These are the items which will be consolidated. Now this consolidation procedure